Assalamu alaikum and good morning. Welcome to the MSX discussion session for the full year 2025, and this is the first session for the year 2026. This is the agenda for today's discussion. So there are 8, the last is the questions and answers. So I will shed light on the board of directors for the previous or the current board, OC, some snapshot on the financial performance, and then key ratios, and then we go to the investment and solvency position. To begin with, the board of directors, we have got 7 members, chaired by Mr. Salim Khalif Al-Manai, and his deputy chairman is Dr. Musallam Muhammad Ali Fadlan, who's also a board member in the, who's also a chairman of ARC committee. Then we've got Mr. Abdullah Khalfan Zaini, board member, NRC committee and strategy investment committee membership as well. Mr. CM Unnikrishnan, he is in the strategy investment committee as well as in the NRC committee. Mr. Muhammad Wahid Al-Farousi, a committee member of ARC. Mr. Ahmed Tabah, chairman of NRC and a member of the committee. And finally, Mr. Chirag Doshi, who is chairing our strategy investment committee and also sits in the NRC committee. In terms of the OC or the management here, we've got, and they're all present in this meeting as well. I've got Mr. Ali Muhammad Al-Lawati, who's our chief business officer, and I've got Mr. Muhammad Jawad, who is our CFO, as well as the investor relationship and board secretary. And I've got Mr. Anwar Shanfari, senior management, government, HR, and admin. And we've got over in the call as well with us our compliance head, Ms. Jawahar, and some other OQIC colleagues and members. In terms of the financial performance, we have summarized for the last 3 years. As you know, there is the IFRS 17 and there is the IFRS 4. So we're slowly deviating from or moving from IFRS 4 to IFRS 17. But then for the sake of comparison, we also like to highlight some of the elements of IFRS 4 as well. Insurance revenue, which is very specific to IFRS 17. In 2023, which was the first year of implementation of IFRS 17, the total revenue generated was 63.7, the insurance revenue. Moved to 69.6, and then in the last year, which is 2025, nearly 70 million. How is that reflected when it comes to GWP? Again, it's the trend is upward the same way. So from 59.5 million GWP in 2023 all the way to nearly 73 million in the year 2025. Now, if we speak about underwriting income, which is again the language of IFRS 4, in 2023, it was 5.1 million, hiked up to 5.8 in 2024, and then down to 5 million in 2025. There are a number of reasons there, but the major contributor in the deterioration of underwriting income for the year 2025 was the performance of medical insurance. And I'm happy to talk more about it later or perhaps in the Q&A session if need be. Investment income was exceptional this year, as you all know, and some of you are experts in that field as well. So the total income from investment activities of OQIC was 2.1 million in the year 2023, and all the way up to 5 million in 2025. And our CFO will talk about it later. The profit after tax in 2023 was 4 million, and then from 2.3 in 2024 to 3.4 million. It's just worth mentioning that the profit after tax in 2025 also includes the Pillar 2 tax that we were subjected to in 2025. And if I remember correctly, it was just over 300,000 Omani riyals, the Pillar 2 tax. So that's not apple-to-apple comparison. But if you want to add to make it apple to apple, so we're talking about some 3.7 to 3.8 million profit after tax before Pillar 2 tax in 2025. The following slide talks about some of the ratios and some of the highlights of the bottom line performance. In terms of the premium mix, again, this is based on the GWP. We have not seen much of change in the portfolio mix. Our strategy did not change. But of course, every year has its own opportunities and its own characteristics. So accordingly, it changes, but there's no major change in our strategy followed in 2024. Retail, again, maintains around between 12 to 13%. Medical increased because there was a growth of the medical business. Life remains almost the same, the proportion of life into the portfolio. Marine and aviation changed, and there's most of this business, as you all know, it's more fronting, especially the aviation element. And what changed mainly is not a new account that we've acquired, a new client we acquired, but it was the timing issue. So what was supposed to be booked in late 2024 got extended and then got booked in Q1 of 2025. So that's the major change. Otherwise, it's the same portfolio. Property shrunk, deteriorated in terms of the composition, not because of loss of any major account, but then the composition of property, because we've seen growth in marine and aviation and then medical, and property remained almost static in terms of the GWP. So we see that the composition of that into the portfolio has gone down, and liability almost remained the same. And so if we talk about combined ratio, and here the combined ratio is based on the IFRS 17, not IFRS 4, based on the methodology and formulas very specific to IFRS 17. So it's still maintained below 100%, but it is in the increasing trend, so from 96.6 all the way to 98.5. We don't take the year 2023 as a benchmark. It was the year that we have, it was the year of merger with Legacy Vision Insurance, and it had a very different dynamics. And 2024 was again, in the same form of integrating our business, and the business got fully integrated in 2024. But there were some impact, and mainly mainly means the motor and the medical impact that also took place in 2025. So the performance 2023 hit us in 2024. That was mainly motor. A lot of cleansing of motor portfolio happened in 2024. And in 2025, there was some under-reserving of medical related to 2024, and we took the hit of 2025. Not only that, we have done a proper cleaning and proper fixing of our medical portfolio in 2025. So we paid the under-reserving of 2024 that was realized, and we have taken sufficient reserving by end of 2025 not to repeat the same story in 2026, and hence the combined ratio or the loss ratio or the underwriting income, call whatever you want, or all connected, has deteriorated slightly. Return on equity, 11%, 6%, 8.5%. This is, again, it's almost apple to apple, because in 2023, the new equity or the combined equity between Legacy Vision and Walker IC, was merged or consolidated. So the new paid-up capital from 10 million to nearly 22 million, 21.998 million. So the return on that new equity, of course, will deteriorate when compared to the previous years, previous to 2023. But then we know the story of 2023, and the investment income well contributed for us in 2025. There's another element that I wanted to highlight here related to investment return on equity and the net profit as well, is that the proper management of cash flow. I think it's something to be It is very commendable what we have done in OQIC, and it was helped our investment portfolio. So we have injected the business money into investment as well. So yes, there's a growth in the investment portfolio. We have also realized investment gain, but also we have injected a sizable amount of business operational money from the insurance activity into the investment. And one element of that is also the contribution of our size in the medical business. Net asset value per share from 229 paisa in 2023 to 252 in 2025, and this is a year-on-year growth in the net asset value per share. Return on investment ratios, 2025 again is an exceptional year for investment, not necessarily to be, or definitely will not be the benchmark moving forward. Yes, the start of 2026 also, it's positive mainly for the Omani security, the MSX, the Muscat Borsa, but this might not continue until the end of the year, so it's not the real benchmark. For us, the benchmark could be somewhere, 2023, if not 2024, but then, not exceeding 5%, but very much around the 4%. It should be the benchmark, but then again, every year has its own dynamics. With that, my part of the presentation, I hand over now to our CFO to walk us through the financial position and then to the investment and our solvencies. Thank you.
Thank you, Mr. Hassan. So moving to the financial, which is based on IFRS 17 calculations, the total paid up share capital is remained the same, 21.99 million in 24 and 25. The net worth total equities jumped from 37.5 to 40.7 million Omani Riyal. Total assets almost same, 109 to 110. Total investments increased by almost 3.5 to 4 million Riyal, from 68.6 to 72 million Omani Riyal, which we will highlight in the next slide. Insurance and reinsurance contract asset and liabilities moved in the same direction. So the changes in both are similar. 37.5 million Riyal, the assets reduced to 35 million. Similarly, the liabilities also reduced from 65 million to 63 million. A number of employees increased, so 203 in 2024 increased to 215 by end of 2025, mainly due to recruitments in medical insurance. Omanization ratio reduced from 82% to 80.5%. The minimum Omanization ratio applied for the sector is 75%, so we are well above the minimum requirement. Moving to the investment details, we can see that the investment portfolio composition here between 2024 and 25, along with the income from different investment instruments. I want to mention that 72 million Riyal is the total investment book by end of 2025 compared to 68.6 million by end of 2024. In terms of the composition, we can see that the company reduced the exposure in fixed deposits from 45 million Riyal to 40.2 million Riyal, and these funds got deployed in other high yield instruments such as bonds and sukuk. So our bond and sukuk portfolio was 15 million Riyal in 2024, which increased to 21.6 million Riyal in 2025. In terms of our equities and mutual fund, from 8.1 million Riyal to 9.8 million Riyal, which was due to the increase in capital of one of the mutual funds which OQIC is participating in. In terms of realized and unrealized, in terms of equities, we highlighted 8.1 to 9.8 million Riyal. So this is the investment composition. In terms of investment income, the company generated 5 million Riyal from its investment activities compared to 2.6 million Riyal in 2024. That gave us a portfolio yield of around 7% compared to 3.8% in 2024. From the pie charts down, we can see that the main contributor to this is the move from negative 600,000 realized and unrealized equities in 2024 to 1.9 million riyal in 2025 gain in equity market. In addition to that, still the interest income is increasing from 2.3 million riyal to 2.5 million riyal in 2025, despite the reduction in the board interest rates. In terms of dividend income, slightly reduced from 1 billion riyal, 900,000 riyal to almost 600,000 riyal due to the investment in mutual fund and moving away from individual securities. Going to the solvency position of OQIC, so the solvency ratio is indicating how the company can pay its claim, the capability of the company, and the higher the solvency ratio, the better the company payouts its liabilities. So as per the risk-based solvency calculations, the company should maintain around 4 million riyal for the general business as a minimum, 2 million riyal for medical business and 1 million riyal for life business. As per the calculations for OQIC, we can see that the minimum 10 million riyal is kept here in the first column. And from 2023 to 2025, we are seeing that the company is maintaining a very healthy solvency ratio. The minimum here is 17.22 million compared to 17 million last year and 12 million in 2023. So that gives us a surplus in 2025 amounting to almost 33 million riyal compared to 29.6 million riyal in 2024. So this indicates how OQIC is a strong company in terms of solvency position and in its ability to pay claims on time. So with this, we are ending our presentation for today, and we are opening the floor for any question and answer.
Thank you. We welcome any questions that you might have for today's session. Anybody with any questions here? If you are wondering, despite, why are we sitting in the office, I would say 95, 97% of our workforce are working, remotely today, but we decided to come here, as we speak, weather is not indicating otherwise, so it's safe here. All right, so I take as no questions to be asked today. So thank you very much, ladies and gentlemen, for your presence today, and we'll see you next time. So thank you.